All right, we are live. Hello, everyone. It's 4 o'clock, so I'm Alisha, and we're here with the 411 at 4. Stephanie, we'd love for you to introduce yourself.
Hi, everybody. I'm Stephanie Means, and I'm a partner with Lenhart, Mason and Associates. And we do all kinds of stuff, but I do pretty much tax. So, yeah.
And we all love that, right? Especially you.
Yes.
Thank God you love it. So with all this going on, what changes have you all made office-wise in how you do things?
So this has been kind of an interesting transition for us, but especially happening right in the middle of tax season. But our whole system is in the cloud, and so we've been able to work remotely for quite some time. But we typically all work in the office. But as soon as the governor issued his first order, we went to working almost entirely remotely, which has had some challenges. And although we're an office full of introverted people, we kind of miss each other. But there's certain pieces of our process that still are very dependent on interaction and somebody being at the office to deal with things. So we've had a few challenges, but overall, I think it's worked really well.
Awesome.
Yeah.
So a few Fridays ago, they passed the CARES Act. Mm-hmm. And I really wanted I couldn't wait to hear what you had to say about it. That's why I reached out to you. So what are some of the highlights that you think that it's so important that everybody knows?
So I think there's a few individual provisions that are going to be really key for people. And I think for our business owners, there's a few business provisions that are going to be really important for them going forward. And I want to emphasize first that with all of this stuff, make sure you're talking to your advisors, because everybody's tax situation is different. And I don't want somebody to say, hey, I saw on the internet.
We're all knowing Facebook. Yeah.
Right. But so it's really important that you keep in touch with your advisors on this stuff. But there's a couple individual provisions that I think are really key for people. And one of them is the stimulus payment. They call it a recovery rebate that's hopefully hitting people's bank accounts right now. I know a number of our clients have already received theirs, so I know they're coming. And they're set up for direct deposit if you have a bank account that's on file with the IRS. So if you filed your return and got a direct deposit with your tax refund, they already have your bank information. If you've closed your account, you need to let the IRS know, and there's a way to do it on their website. Otherwise, it's going to go to the wrong account. But those direct deposits are coming now. Checks are set up to start going the 1st of May. And I don't know what their system is for releasing all of this. Sometimes there's no rhyme or reason to what they do, but sure. But stuff is coming. One of the things that I want people to make sure they're aware of is, because I think all over the media they keep saying $1,200 per taxpayer, and that only applies if you, as a single person, made $75,000 or less when you filed your tax return. If you're above $75,000 but you're below $99,000, your payment is somewhere between $1,200 and zero. Just depends on where you fall in there. And if you're above $99,000, you're not going to get a stimulus payment. And they're basing that off your 2019 tax return. And if you haven't filed 2019 yet, they're basing it off of 2018. But there's a lot of misconceptions out there about what this is and how it's going to affect us next year when we file our taxes and all that kind of stuff. So I think it's really important that people know that this payment is not taxable. It's not going to get included in your income next year. And it's not an advance on whatever kind of refund you would get for next year. They're not just going to take our money and then, or give us money and then take it out of what we would get next year. What it is technically is a credit for 2020, and they're giving it to us early. So next year, when people file their taxes, they're going to recompute this credit actually based on 2020 income. And then at some point further down their tax return, they're going to say, oh, look, I already got a check for this amount. So it's kind of an in and an out. But what it does for people that maybe didn't qualify off their 2019 income or 2018, if their 2020 income really falls off and all of a sudden they qualify for it, they're still going to get it. They're just going to have to wait to get it because it's not going to come until they file their 2020 tax return. So it's, I don't know, it's interesting the way they do it, but it's their only way to really get it out to people now, as opposed to waiting till we file our tax returns next year.
So someone that's watching had a question. So what if you owe back taxes? Does that do anything?
My understanding is if you owe back taxes, the IRS is going to keep it, is my understanding. But I haven't had a client that has experienced that yet. But that's my understanding. Same with, I think, back child support. I think they're going to keep that too. But I don't know. I don't know that for sure. I haven't actually physically seen that.
Okay. Awesome. So what's the next thing in there that you thought we all should know?
So there's a couple other things that when they pass this, they put in provisions that I think could be helpful to people. One of them is that if you have to dip into a retirement account, and right now under current law, if you're under 59 and a half and you get some money out of your IRA, you have to pay a 10% penalty to get it out of there. And so with this law, as long as your withdrawal is related to the COVID-19 stuff, so you lost your job, you had a significant decrease in hours, whatever it is, you can pull that money out of your retirement account penalty free. It's still taxable income, but it's not, you don't have to pay the penalty on it. It's not the best route. I mean, obviously if you need the cash and that's your only way to get it, then, by all means do it. But pulling money out of a retirement account that is tax deferred like that it's not the best financial advice. Mm-hmm. So I think that could be helpful for some people that really are in a cash crunch. But like I said, it's probably a last resort there. And then one of the other provisions that they passed for those that are still paying on some student loans is they did an automatic payment deferral for 6 months for student loan payments, and interest won't accrue on that either. So I think that could be really helpful for some people. My understanding is they're going to do it automatically. So if you still have cash flow and still want to make those payments, you need to talk to your lender. And those are the federal student loans, not if you just got one through the bank. Mm-hmm. So I think they tried to do some stuff that would get some cash to people right away, and also help, ease some of that burden on the cash flow, because it's obviously people are hurting financially right now. So I think those are the big individual provisions.
And we're going to get into business in a second, but I was reading, we talked about this before, but before we got on, but that there was an increase in what you can deduct if you want to give a charitable contribution, because a lot of these nonprofits are still doing everything they do, but they can't fundraise. Yeah. And I think that's worth talking about a little bit, because there's quite a lot of people that depend on some of those nonprofits when their kids get sick or things like that. So how does that charitable donation work?
So charitable contributions are part of our itemized deductions. So it falls in that category. But what currently happens is your charitable contributions that you can make and deduct are limited to a percentage of your taxable income or your adjusted gross income. And so what they did with this is they expanded that amount so that you can, the percentage is higher for what you can deduct in relation to your income. So it should, hopefully it'll spur some people, like you said, to get those deductions coming. And, one thing too that people can do that I think a lot of people don't know is if you are required to take distributions from your IRA, so if you're above, now it's 72, but and you're required to pull those distributions out, you can make a qualified charitable distribution out of that and not have that come into your income and get the deduction, and get a charitable donation for it. So for our, so for our retirees that perhaps don't need the cash from their required minimum distribution, but they have to take it, although they suspended it for this year with this tax law. But if they want to pull it out and get some money to those charities that are really trying to help people right now, that's a great way to do it.
So they suspended that you have to take it out?
They suspended it. Yep. That you don't have to take your required minimum distribution for this year.
Okay.
Because lots of people they have to pull it out. They're required to, but they've got other sources of cash flow and maybe they don't need to, but they make them take it out and then they've got to pay tax on it. So they suspended that for this year.
Okay. So now let's get into the business portion, because we have been talking about this a lot. We had Tyler Stark on last week about the PPP loans and some of the other things that could be done. And so let's talk a little bit about that.
Okay. So we'll just touch really quick on the PPP loans because,
Right.
people have to know that, and the EIDL, the Economic Injury Disaster Loans. If you haven't seen the news already, they ran out of money today. Anything that's currently in the pipeline, it sounds like that's still going to be funded. Anything they've already approved, but they're at their limit for approval. So they're literally waiting on Congress to allocate more money to the program, which, everybody that we've talked to in the lending industry seems pretty confident that they will. They just opened up the ability for self-employed people to apply for these over the weekend. And so those guys really haven't even had a chance to take advantage of the program before it ran out of cash. So I suspect they will allocate more to it. But that's probably the biggest provision that will be really helpful to people and probably be really key for them to allocate more funding to it. Just because those loans, to the extent that you use them on the qualified expenses, they're forgiven. So that could really keep some people employed, keep some payroll running, and not maybe have so much disruption in the business industry. But there's a couple other pieces that they dealt specifically with payroll taxes that might help some people, especially if they don't allocate additional funding to the PPP loans. And they have an employee retention credit, and what they do there is businesses can get a credit against their portion of their payroll taxes based on employee salaries. Again, that's something that people want to make sure they talk to their accountant about. But it could be really helpful. And that's a quarter by quarter calculation. And it specifically applies to people that or to businesses that were forced to shut down, by the governor's order, things like that. But it could apply to others too if they saw a more than 50% decrease in their revenue over the same quarter of the prior year, which I think, specifically with us in the oil and gas area and the issues we're having there, we probably have a number of people that would qualify for that. But again, you've got to be still employing people because you've got to be paying them to be able to take advantage of the credit. And that's a quarter by quarter calculation. So could be very helpful. You can't take that and have the PPP stuff because then you're kind of double dipping there. So that there again, you got to watch that interplay and make sure you're talking to your banker and make sure you're talking to your accountant for what you can qualify for there. The other thing that they did was they're allowing companies to postpone the payment of their share of the Social Security tax. So they can defer the payment of some of their payroll taxes for the second, third, and fourth quarter of 2020 and pay half of it at the end of 2021 and half of it at the end of 2022. And it only applies to the employer's share. Employees' share, you still have to send that in, and the IRS is very sticky with payroll taxes. But if companies need some cash flow, they could defer that, for a period of time. We're not recommending that to our clients unless it's absolutely necessary, just because you're just kicking the can down the road and you're gonna have to pay that. And when it comes due, it's gonna come due, all together. So if you have the cash flow, we're completely, recommending that people continue to pay that, but just know that it's there, that if we need to, if we need some breathing room with that, we could defer those payments.
Okay. So Now, do you suggest people keep going if they were going to apply for those different loans so that they're ready when the new amount of funding comes, if it does?
I would, and the lenders that we have talked to today are suggesting that as well. That if they're already somewhere in the process, keep pushing your information through, keep getting applied. I don't know. The SBA is not accepting new applications, so I don't know if some of our local lenders are accepting the applications and holding them in a queue. But I would definitely encourage people to ask their banker, if they haven't already put in an application, can they? Because when they open that funding back up, I suspect there's going to be a lot of people pushing send to try to get that stuff pushed through, because that money went fast.
So what about the first one you talked about with, I always forget the name, the $10,000, the disaster,
the economic injury disaster loan?
Yes. So initially, how that was kind of put out there, especially to realtors and other people, is that you could apply for that. And then it came back and said, oh, you don't have enough employees. So do you know anything about that? Somebody just asked that. And
I don't know. I don't know on the limit of employees. I know there's an upper limit to it, but I don't know. I didn't know that there was a lower limit to it. Because I think it still falls under the same provisions like the PPP, where the upper limit is 500 employees.
Mm-hmm.
But I don't think I knew that there was a lower limit to that loan.
Yeah, we didn't either. And so, but a lot of people have gotten it back that were real estate agents. And they said, somebody just reminded me of that. But.
Oh, gotcha. Okay. And I don't know if that was, like with the PPP program, they didn't allow the self-employed folks to do it to start with either, so I don't know if that was at the very beginning of the EIDL loan too, where the self-employed, you had to actually have payroll before you could apply for it. And that may have come a little bit later.
Okay. So Ashley, the one that she was talking about was the employment retention credit. I think that's what you're asking. Is there anything else on that?
No, I think that one pretty much covers it.
Okay.
Yeah.
Awesome. And so I think it's really important that if you haven't applied for any of these, that you do call the banker that you bank with.
Yes.
I think that's the best thing. A lot of banks aren't taking new clients in for that.
Yep, that's correct. I think the ones we've talked to said that they'll be more than happy to help after they help their existing, customer base, because those guys.
I didn't mean it like.
Yeah, no.
Yeah.
But they're, and I totally get that, because those guys, once this came into play, they went into overdrive trying to help, as many people as they could. They've been pretty amazing.
Yeah, they have.
Yeah.
So through all this, I'm probably putting you on the spot because I think I didn't tell you I asked this. I always ask people, like, what's your message of hope with all this? Like, how do you view us on the other side? Because we know we're going to get there.
So, we are going to get there. We're totally going to get there. And I think one of the things that I appreciate the most about living in Casper is we have a tremendous sense of community. And I think our people step up like no other, when we have a community in need. And so, we can see it. You can see all the frontline people that are doing what they have to do to get us through this. And we can see it on the back end, to see how many people are just flat out trying to help. I watched your video with Gail yesterday with WCDA, and she's sitting there trying to help people stay in their houses. And the bankers are trying to help people get their loans so they can keep people employed. And the accountants are all doing the same thing. And there's so many people that just help here. And so I don't see that as being different on the other side. I think that's how we're going to get to the other side, just because we are who we are. And I think it'll take some time. I think recovery is going to take a little bit, especially because we're in a unique position where we're hit with the double whammy of the virus and the oil, the price of oil, in the tank. But I think we have a community that's going to do everything we can to take care of our own, which is what I love about here.
Yes, isn't it amazing? I mean, I've heard story after story of people helping people, and sometimes it's just I don't know, flowers on somebody's doorstep, or I don't know, a dozen eggs, or whatever it is to kind of get that person's I don't know, spirits up.
Yeah, absolutely. Absolutely. Sometimes it is just the little thing. It's I could see some of the neighbor kids that are out of school, out shoveling walks today. And, I mean, just sometimes it's just the little things that help somebody make it through the day,
Yes. And I gotta say, thank God for Zoom and all those things, because that's how some of these kids are keeping in contact with each other. I know my daughter's about ready to go nuts. So
yep, I hear you.
Yep.
And we're all stuck teaching Common Core math. I don't know how that happened.
Well, thank God I don't have to do that. They do not do that at Paradise Valley Christian School. But yeah, but we do also have, we're doing what we're doing, and then we have to make sure that our kids get their stuff done. So the teachers have really stepped up though too. I mean, if you call and ask them, hey, I need help, they're right there. Thank God.
Absolutely. Yeah. Yeah. I think it's, as maybe sad as it is, but it helps that we are all in the same boat. And so there's understanding for what the other person is going through, and, and that's what helps us help each other, because we're all in it together, literally.
Yes, I agree. Well, thank you so much. This was great information. We learned a lot. And I'm grateful that you agreed to do this. So thank you.
You're very welcome. Thanks for asking.
See you later.
Bye.